guys, Eddie back with Couch Talk. Welcome back to the show. If it's your first time with me, welcome to the show. Guys, please hit like, please hit subscribe, turn your notifications on, and I promise if you stick with me, I will earn your viewership. Guys, speaking of earning your viewership, I'm going to earn it right now. I'm going to earn it 10 times over. I'm going to talk about bail-ins. If you have not heard of this phenomenon, then you need to start researching it now. You need to do whatever you can to protect yourself because our banking system is about to collapse. And if and when it does collapse, you will not be protected at all. I'm going to say that again. If and when our banking system collapses, you will not be protected. Okay? Now, the problem is, some of the laws have changed over the last couple of years. I didn't even hear about this. I should have, but I wasn't really paying as much attention to politics back then. I wasn't paying attention to the financial world as much. I was kind of, in my own little world. I was trying to do my last little thing with jiu-jitsu and see if I could make something happen there. But apparently, I guess it was 2019, 2020, somewhere around there, the laws have shifted. And Congress passed a law that basically says that the banks are allowed, in order to save themselves from a collapse, from this is during COVID times, they were able to, instead of, being bailed out by the government, they were able to bail themselves in. And how they would do that is they'll take users' money. Basically, as you give your money to the bank, it is now considered an unsecured loan. Now, it's supposed to be secured, right? We'll talk about that in a second. But it is not actually secured. So the banks can bail themselves out using their own money from within. So they call it a bail-in, right? Now, the problem is, everybody thinks, okay, well, it's fine. If that happens, if the worst comes to worst, FDIC will take care of me. I'm supposed to be covered up to $250,000, right? I think it's only $200,000 now, maybe. I don't know. Anyway, Federal Deposit Insurance Commission is supposed to cover a substantial portion of money, right? So if you're not filthy rich, by the way, if you're filthy rich, get your money out too. But if you aren't, then, in theory, everything should be covered, right? Wrong. So that's only if the FDIC actually has the money. Now, some of you have heard me talk about fractional reserve banking, and some of you understand the basic concepts behind it, but the shortest version of this and the most important version is that only a very, very small fraction of the actual money that people have in the universe, in the world, is actually in banks in cash form, right? Most of it's digital. Most of it's all ones and zeros. So when you go to the bank and you have to take out money, they're not necessarily giving you your money because they don't store your money in that bank. What they store is a certain amount of money with which they can give you from that reserve, right? The trouble is, it's only about 2.6% of the total American value in actual currency, right? I think that's about $200 billion worth out of the $9 trillion in circulation in total, right? So, but only 200 billion of that is covered. So that's like 2.6%. It's like negligible, right? So if knock on wood, please don't ever let it come to pass. But if it does, if there's a run on the banks, if everybody says, we just want to start taking money out, if people decide to switch over to crypto, if there's a problem, like I've already heard that there's been trouble at Bank of America is having trouble paying some people out. I've heard that some auto deposits are not coming through as quickly. I've heard that some direct deposits and some auto withdrawals are they're having time delays and lags on delivery, 3, 7 day, 10-day delays sometimes. So I'm already hearing whispers of this coming to pass. And if it comes to pass and everybody starts to go grab their money so that they make sure they have it, then we could all be in a lot of trouble because I guarantee you there will be no way to pay out all of the money. There will be no way to do it. It doesn't exist enough money in circulation to possibly. And if we print enough money in circulation to cover all of the money, then that too has its own set of problems because the inflation would be off the chart. The American dollar would, what is 2.6? It's like 40 times. Your money would be worth 40 times less. It would be like a 40th of its value now. Maybe not exactly. It doesn't translate like that exactly, but you get the idea. We'd be up shit's creek. There'd be nothing that we could do. And then here's what I recommend. I recommend you start creating a secondary reserve. I recommend you create a safety net, something that is not in a banking system, something that's cash on hand. I like valuable metals. Matter of fact, I think gold will do very well over the next year. I think silver would do very well over the next year. Best case scenario is you get yourself something that has lasting value, like real estate or like a part of a farm, part of a mine. Those things will have lasting value and will continue to bear out dividends as you go forward. And I know that's probably just good financial advice anyway, but now more so than ever, start taking your money out, start setting a certain amount aside as cash on hand to have on hand for you at all times in case the worst comes to pass. And guys, start researching this bail-in, start seeing what you can do to avoid it, to get accounts that are not bound by it. And that's my best advice for right now. Stay tuned. I'll give you more information as I get it. But for right now, I needed to get this out as soon as I heard it and to get it around to all of you guys. Talk to you later.